Hi there, Fabian Klaus here from the Guyana Revenue Authority. This week we focus on computing your income tax. As you know, the April 30 due date is not far away. We look at the 7B certificate, which, as you know, declares your income, taxable, non-taxable, and other details, and we'll show you how the tax is calculated. We'll also explain how to calculate taxes using two scenarios. If you have two jobs, or if you're both employed and you have your own business. This is where Focus on GRA begins.
The Guyana Revenue Authority has reintroduced its tax sites to ensure you file your tax returns on time. Beginning April 4, 2022 up until April 29, 2022, excluding holidays and weekends, tax sites will be at the Gifflin Mall, East Coast Demerara, Amazonia Mall, East Bank Demerara, and GRA offices on Camp Street, the Guyana Post Office, Rob Street entrance, and the Licensed Revenue Office Railway Embankment. Officers will be at the Gifflin Mall and Amazonia Mall from 10 a.m. to 4 p.m. Mondays to Thursdays and up to 3 p.m. on Fridays. Drop boxes will also be available at the GRA's headquarters, GPO, Rob Street, and LRO Railway Embankment, normal working hours. GRA officers will not be issuing lodgement receipts, but they will be verifying that tax returns are properly completed before being submitted into drop boxes at these locations. Remember, it is your legal obligation to submit your individual income, individual property, company property, capital gains, and corporation property tax returns and make any outstanding tax payments on or before April 30, 2022. The tax sites are for persons who wish to manually submit their tax returns. Persons outside of Georgetown are encouraged to submit their tax returns at their nearest integrated regional tax office. Remember, these tax sites will be in operation from April 4 to April 29, 2022. GRA, your partner in development.
Welcome to Focus on GRA. This is a program of information for taxpayer education. Income tax is calculated at specified rates on the taxable portion of the income you earned last year. We'll demonstrate how taxable income is calculated, and we'll be using a sample of a 7B certificate to illustrate. Employees submitting income tax returns this year must ensure that they obtain the appropriate 7B or emolument certificates from their employers, and that it bears the official stamp and signature of the employer. The issuing of the certificate is in keeping with the income tax deduction of tax from emoluments regulations, which requires the employer to give every person employed by him or her a certificate showing the total amount of the emolument paid during the year and the total tax deducted for the period of income January to December. The certificate is prepared by the employer and presented to the employee in duplicate, with the original on one side and the copy on the other. The original must be securely attached to the income tax return form and the copy retained for record purposes. Those who are submitting online will be required to scan the slip and save it to their computers before uploading it to the required fields via the Optimal eServices platform. Learn how to submit a tax return online by checking out the GRA's YouTube video titled Submitting an Individual Income Tax Return Online. The income subject to taxation is identified in the line Salary of Wages Basic. If the individual receives taxable allowances, the tax would be assessed on the total of the salary of wages basic and the taxable allowances. If, on the other hand, the individual receives non-taxable allowances, the tax would only be assessed on the salary of wages basic. The employee's National Insurance Scheme contributions must also be reflected on the certificate. The statutory deductions is 1/3 of the salary of wages basic. In determining the amount of tax deducted from the gross or salary of wages, the following is required. The statutory deduction is added to the NIS contributions to make up the total amount in deductions. The total deductions is then subtracted from the salary of wages basic. The remaining amount is known as the chargeable or taxable income. Section 36 of the Income Tax Act states that the tax upon the chargeable income of every person shall be at a rate of 28% of the chargeable income of every person less than $1,560,000, whereas chargeable income in excess of $1,560,000 shall be taxed at a rate of 40%. Therefore, since the chargeable income for year of income 2021 is $2,351,861 in this scenario, the first $1,560,000 of that amount is taxed at 28%, and the amount in excess is taxed at 40%. The total tax payable is therefore $753,544. Now, if you work 2 jobs in the previous year, you must declare income from both sources when calculating your tax liabilities. The next feature will illustrate how taxpayers in this scenario must compute their taxes.
Once employed, an individual is required to fulfill their tax obligation by submitting their individual income tax return on or before April 30th each year for the income earned for the preceding year. Income can be earned from a single source or from multiple sources. An individual will be subject to tax on his or her total income earned. This means that an individual who has 2 or more employers is required to pay tax on the aggregated income. The aggregated income will be used to determine the individual's statutory allowance as well as the rate of tax that must be applied. Employees are reminded that they are only required to file a single return if they have multiple employers. However, they must ensure that they attach all of the emolument or 7B slip on the return and recompute their taxes. For example, in 2021, Mary worked at GWI and GPL and obtained her emolument slip, which indicates the following: total income from GWI, $1,800,000, income earned from GPL, $900,000. Statutory allowance, $780,000 from both GWI and GPL. NIS contribution, GWI, $84,000, and income tax deducted from GWI, $457,376, and income tax deducted from GPL, $33,600. To be able to establish Mary's tax position, the 2 income must firstly be combined. In this instance, the 2 income will be $2,700,000. The next step is to deduct the applicable statutory deduction and her NIS contribution. If an individual total income is less than $2,340,000, the applicable statutory deduction should be $780,000. Should this amount exceed $2,340,000, the statutory deduction will be 1/3 of the total income. This is in keeping with Section 20 of the Income Tax Act, Chapter 8101. Since Mary's total income exceeds $2,340,000, our statutory allowance will be $900,000, which is 1/3 of our total income. After deducting the statutory deduction and NIS contribution from the total income, we will arrive at the chargeable income. The chargeable income is the amount upon which the tax rate will be applied. The chargeable income in this case would be $1,716,000. Further, in accordance with Section 36 and 36A of the Income Tax Act, Chapter 8101, an individual will be subject to tax at a single rate of 28% or a dual rate of 28 and 40%. Since Mary's chargeable income exceeds $1,560,000, she will be taxed at a dual rate of 28 and 40%. That is, 28% on the first $1,560,000 and 40% on the remainder. So the total tax that should be paid by Mary is $499,200. However, based on the emolument slip obtained from GWI and GPL, the total income tax deducted was $490,976,000. This indicates that Mary has tax outstanding of $8,224. That is the difference between total tax payable and the income tax deducted. The outstanding amount must be paid to the Guyana Revenue Authority on or before April 30th, 2022. Individuals who fail to submit their individual income tax return and make payment by the deadline will be required to pay interest and penalties.
On the other side of the break, you'll be joined by a tax specialist who will continue the discussion on tax computations for persons with multiple sources of income. Don't go anywhere.
Individuals are reminded that when filing an individual income tax return, if you have multiple employers, you must file only one individual income tax return. However, the original of each emolument 7B slip obtained from the respective employers must be attached to the return, and the aggregated income should be used to compute your taxes. Remember, only one individual income tax return must be submitted to the Guyana Revenue Authority for individuals with multiple employers.
Communication Officer Ms. Carlita Edwards is in the virtual room with a tax specialist to answer a few questions from the public. Carlita, take it away.
Welcome to your question in focus. As the due date for the submission of returns draw near, it is important that individuals understand how to file their individual income tax return. Joining me today is Ms. Marcel Evans from our Tax Advisory Services section, and she will be answering questions submitted by Ms. Smith. Ms. Evans, welcome to the program.
Thank you, Ms. Edwards.
The first question from Ms. Smith is, how many individual income tax will a person have to submit if they have multiple employers?
An individual who has multiple sources of income is required to submit only one individual income tax return. However, the original of each emolument or 7B slip obtained from their respective employers must be attached to that return, and the aggregate income should be used to compute the taxes.
Ms. Smith is also seeking clarification on the documents that must be attached to the individual income tax return if an individual is an employee and also owns and operates a business.
An individual that is employed and run their own business must obtain their emolument or 7B slip from their employer and also submit an income and expenditures statement or a profit or loss statement for the income earned from their private business. They must also submit a wear and tear schedule or loss relief schedule if they claim for depreciation or reported a loss in their financial statement.
Thank you so much, Ms. Evans. If you need any additional information, feel free to contact our Tax Advisory Services Division on telephone numbers listed at the end of the program.
Thank you very much, Carlita, and one of our tax specialists from the Tax Advisory Services section. And that's all the time we have for you in this week's Focus on GRA. But for more information on tax computations for persons with multiple sources of income and other information that you may require, visit our website, gra.gov.gy. You can also check out our YouTube channel where we have several videos. And you can send us your inquiries via email, grapublicrelations@gmail.com. Don't forget to follow us on our social media pages, Facebook, LinkedIn, Twitter, and Instagram for up-to-date tax-related information. Thank you for watching. I am Fabian Kraus. Stay safe, everyone.